Hello guys. I just want us to look at the US 100 or Nasdaq, just a quick session or an updated analysis, because the structure looks interesting right now. So if you're new on this channel, make sure that you sort of subscribe and you leave a comment, just like what you think of the channel, because this is the channel where I share market analysis, and we only do price action. We don't do indicators here. So we trade based on the current action, what we're seeing, the price action. So you can just watch the video till the end and then just let us what you think. So let's get started. And how we do things is just all the time we start with the highest time frame, but because we looked at this one not so long ago, I'm not gonna waste time on the higher time frame. All you need to know is that this is your monthly support and this is your monthly resistance. We touched the support, we tried to reach for the resistance, we didn't get there. We came back, now we are closer to the support, but we still have enough space. Even if you were to trade to the downside, it wouldn't be much of an issue. But don't trade to the downside and then start saying I'm gonna place my take profits here, because now what are you saying about this support here? Because it is a support, it is valid. Yes, it was hit before, but it doesn't mean it should be broken. So you should always make sure that when there's a structure along the way, you take it into consideration when you're placing your TP, because no one knows when it's going to be broken. So that's all that I want you to take from the monthly, because like I said, this is going to be a very quick session. So let's check what is happening on weekly. On weekly, in the previous analysis that we made, when was it? Sunday, we had said that this support here, it's a very strong support because of what it did. It pushed up and broke area of resistance and broke the bearish trend line. So it's a very strong support. But someone can even try and say, but there's something starting here. But now in this case, I would go with it from this. So, but if you're saying you want to draw it, marking it from there because of the all of this that is happening here, that's fine. You can do it like that. But for me, I'm marking it here. So if you drew it that way, it means that for you it has already been hit, and then it's trying to react from it. And then should you get stuff to trade on smaller time frames, you could do so. Then let's just move down to, in terms of in terms of resistance, we don't have anything along the way besides until we hit that. This here is just a pullback. Yes, when you're going up, we can try and exit here as exit number one, because we don't know why the price suddenly turned here, because when we looked left, we didn't see anything. So unless if you wanted to go with the old support becoming the new resistance, but that's not enough. So because you don't know why it turned there, when the price goes up, it might struggle to pass that point again, which means that's why you need to make sure that some of your trades, you exit them there. So that is all that you can take from weekly. Now let's look at daily. So on daily, if you still remember, on the previous video we marked this as the current support on daily. That's holding. Currently this is our support, and until it is broken, we are not gonna trade against it. Especially that's why I'm saying when you're buying, you need to make sure that when you're selling, when you hit the next opposite structure, don't predict that it's gonna be broken. Do not, because yes, it can be broken, but there's higher chances of it holding. So because you don't know what's gonna happen when you hit the opposite structure, make sure that you exit your trade. You don't have to try and invite trouble. So in this case, we understand that our support was hit there, the price got rejected until that point, but it didn't go far. It just went until the resistance, which is why we don't predict it's going to be broken. You take from this support, you exit there, then you just watch and see who is going to win, and whoever that wins, then that's the one that you're going to trade with in their direction. Because if you're just going to say I'm backing up the bulls, I know they're going to win, and then the sellers here, they defeated you because they pushed the price back down, you see. So to avoid such, you just need to make sure that when you hit the opposite level, you stay outside on the sidelines, and then you watch and see what happens. And then when you're getting confirmation to go in the opposite direction, you can do so, because you can see that, oh, we have hit this level. Now it seems like the sellers in this resistance, they are becoming stronger. They are showing some aggressiveness. They are giving me some rejection candlesticks, maybe, or reversal patterns. That's why I'm trying to go in their direction. So that's it. The support here is holding. And another thing that we can take from this is that we're now having So the candlestick from yesterday gave us engulfing bar, which is a bullish one, and we know a bullish engulfing at a support is a good thing for the buyers because that's their zone. They are showing that they are trying to defend it. So meaning from where we are, we have got higher chances, but there is a lot of resistance still from this, but we've got higher chances of going back to that resistance. But we're not gonna just go and jump in. So here the support is holding. We even had the bulls leaving with engulfing, and then there's the resistance, so they've got higher chances of going back there. So let's look at H4 and see what is happening on H4. So in H4, this is, remember on daily we were talking about the time where the price touched this support for the first time and then it got rejected, was this, and then it went up towards the same this H4 was inside there daily that we spoke about just now, this one, because that first touch was here and then it went back to that daily. On H4 it looked something like this. The first touch went back to daily, and that inside that daily you had the H4. From there you got rejected and forced to go back down to the daily support, and then you've been playing around that support for a while now. So on this time frame you had what we call a bearish trend line. Because the momentum was sort of pushing to the downside. When the bears pushed you from their resistance and forced you to go down, you had a bearish trend line here. You had a bearish trend line here, and you had an area of what? Of resistance there. And then now the price is back inside the daily support, and then it is pushing up, and there is your resistance on H4. So what you need to understand is that this resistance was not a good area for you to just go and maybe with a limit or anything like that, because it's a, look at it, the candlesticks around it is formed by pin bars. It's not a good zone. And again, the price, when it was retesting or going back to it, when it was going back to it here, going back to the zone, it was coming from daily support versus your H4 resistance. So you're trying to sell while the daily support is pushing up, not a good thing. And again, when we hit that, we were sort of, the candlestick that hit there started outside, so it was gonna be a mission for it to try and reverse and go back inside the zone. So this was not a good zone to try and execute from. But if you got reasons to buy here, you could do so. But even when you got the thing to buy, you can't go and place your TP there, because there's a lot of bearish stuff along the way that you're gonna hit. So which is why when you get your reason to go long here, maybe on H1, you need to make sure that when you hit this, you exit, because you didn't know the trend line was going to be broken. You know the trend line when you're still holding the trade, the trend line was still active, which is why when you're going to hit that, you need to exit and just see what's happening. In this case, while you're waiting after hitting your TP, you will just say, oh, let me see who's going to win now. This bearish trend line is going to push the price back down, or the bulls that are coming from the daily zone are going to still continue with their momentum and defeat the trend line. In this case, who won? It was the bulls. The bulls that are coming from the daily support, they showed some serious aggressiveness. They pushed up and broke the trend line, the bearish trend line, and also the area of resistance. Those are the structures of those are bearish structures, the structures of the bears. So meaning when they did that, the bulls, they showed that they defeated the bears. So the bulls in this case are the ones that have accomplished something, right? So meaning if you were to try and join them now, it wouldn't be a bad idea. So in this case, that's why I have the horizontal line. You can just say this is my H4 support that pushed up and broke a bearish trend line, and it also broke the resistance. So meaning it is a very strong area of support. So it is on H4. Should the price do this, you are more than welcome to buy and hope that it will continue going up, maybe towards, like we said, towards the same daily. Remember the daily resistance that initially pushed the price down. I think it starts here, the daily resistance. Yes, this one here. I hope you didn't forget this one. Let me try and mark it so that when you're on H4 you can see where it starts. Maybe when the price is pushing down, it will take you back to this area. So let's go back to H4. Yes, you see where it starts. Now we are coming back. We didn't touch it. So we can't say the higher time frame is holding. That's why we can't buy against it. In this case, the daily is not holding. So that's why I'm saying maybe the H4 zone here that accomplished all of that can reject the price. It might reject the price, and then it will be your ticket to go up and hit that daily resistance. We understand it was hit before, but it doesn't mean it should be broken, which is why when you hit there, you're going to exit and see and check whether the bears are still going to push down or the bulls are still going to continue and break their zone. You see? Or if you are opening more than one trade, maybe you can exit most of your trades there and just leave one running and lock the profits, some of the profit, and say, I'm just gonna, hope that the bears win this battle. But you can't do that if you're only holding one trade, because there you'll be gambling. It's like you can see that you have hit a daily area of resistance, but you're still gonna say it is going to be broken. Yes, it can be broken, but you're gambling if that's your only trade. All right. So now let's see what happened on H1. So here we can just conclude by saying this support is what we expect the price to respect and go back up. So when the price gets in here, search for buy trades and hope that it will go up there. Even when you are on your way to the top, just like what we did on daily, on weekly. We said we don't know why it turned here. Okay, we don't know why it did that. So which means when it's coming back again, this is your TP1 and then max TP. This is where you're exiting, because that's a daily one now. So it must dip inside. We're saying it must dip inside this, and then we can take it up to that. So let's see what's happening on H1. This is what you have on H1. This is what you have on H1. So on H1, remember, when I said if you had gotten a trade inside here, maybe you would have gotten it on smaller time frames like this one, H1. So let's see if it gave you something. So when you're going down, remember each time frame can have its own trend line, it can have its own zones and stuff and trend and everything. So let's remove that H4 trend line and just start with the structures on here on H1. So when we're moving to the downside, H1 had its own trend line here, which looks different to the one we got for what? For H4. But because we understand the structure is not the same, here we've got too many candlesticks compared to H4. That's why the structure might end up being different, and the trend line where we place it might be different. So this is where you had your trend line. And when the price was here giving you all the pin bars, maybe you were like, no, but if I take this one, when I'm talking about opposite structure, it has to be a trend line or area of resistance. So in this case, if I buy here, already the trend line is too close. So maybe you say, no, that one I'm not gonna take, because if I take it, I'm planning to exit on the opposite structure on the same time frame or the higher time frame. Here on the same time frame, I don't have enough space before I hit the resistance, or before I hit the resistance in the form of a trend line. So you say, nah, I'm not gonna take that one. Then you let it pass, and then the price goes up. It sort of goes above the resistance and your trend line. Then you're saying, oh, so it means like the support, maybe support from this is the one that did all of that. Should the price pull back to it, I can now safely say the opposite structure that I was scared of has been defeated. So I can now take trades to the upside. That's when it went up like that. So this is where you have taken your buy on H1. Then it took off like that. So that's how basically when we're saying you wait for confirmation or you wait for change in momentum, that's what we mean. You wait for the price to just go up and show you that yes, the direction that you are still skeptical about, yes, it seems like it might work, because what the price, you can see it moved up. It convinced you by breaking the bearish trend line and also by breaking area of resistance, opening more space for the bulls to push up. So that's where you could have taken your trade somewhere up down here. Now it is coming back. We can see that on this same time frame. Remember on H4 we said we would like it maybe to dip at least to that before taking off, but this will be our TP1 around there. Any zone there will be our TP1. Eh? So on H1, what do we have? Because that's what we made in a conclusion based on the structure on H4. On H1 we have got this. This is H1 support. All right, and then this is H1 trend line. So now is a question of saying, are you going to trust the current support and say it will push the price back up to that, or are you going to say, nah, but I trust this one because it will be like this one here, because it will be around the trend line. It will be around the trend line on this time frame, yes, and also it will be around the H4 zone, because remember the H4 zone starts here, and then maybe you can say I'm waiting there for you to do that. I will leave that one to you to decide on what you want to do. So you can decide to go with the current one. If it fails, you go with the second one. But if your account doesn't allow you to do such, and then you'll just try and increase your odds by waiting here. But even this one, if you agree, it's a current support, it's the nearest support, and the price took off nicely, and then it took forever to come back. Now it is back. But here is the one that it is go higher than this one, because it is located near a bigger structure. So meaning, in this case, I would suggest you wait for this one. But even if you want to donate to the markets there, or risk this risk here, yes, you can do that, but you need to make sure that you are very strict with your stop losses if you decide to search for trades inside the current H1 support. But if you're trading bigger time frames, you just have to wait for H4 there. And if you're getting your thing, it means you're targeting, like I said, the next opposite structure on the same time frame will be up there. Then that's it, guys. I think I'm gonna end this one here, and if you have questions, you just ask in the comment section. And if you are interested in learning this style of trading further, you can just text me on Telegram, and then I will because I do have a mentorship that's currently on, and yeah, we can maybe get you something. So this is the number. You can contact me on Telegram, and we will take it from there. But for now, this is all that I wanted to show you. This is how I want you to approach a chart, So I understand my channel is still very small. It doesn't reach a lot of people, but the ones that are there, that I'm reaching the current audience, I'm happy with the positive feedback that I've been receiving in the comment section. So that's why I'm not gonna stop making videos. If it was all negative, I wasn't even gonna do the mentorship, because when I started the YouTube channel, I just wanted to share the knowledge on YouTube. That's it. Until people said I should try maybe a mentorship, but for the signals, I'm not gonna do that, because I believe in empowering people. I believe in giving you the knowledge, and then you go and create your own signals. You see, so that's why I'm not gonna do the signals, because the signals, you can pay for the signals, and it means if that person is having a bad month, if they are having a bad trading month, it means everyone is gonna suffer, and they paid that time. They paid, and it means at the end of the month they must pay again, even though they haven't made anything. If they want to stay in the group, they must pay again. So that's why I'm not going to do that. So because myself, I know I don't always get trades. Sometimes I can go for a couple of days without executing anything. So it means now when you're in the thing, when you are in the signal group, every day is important. So meaning you wish you could get trades every single day. So that's not my thing. Now I believe in teaching. I believe in giving you all the skills, and then you go and do your thing. So I think I'm gonna end it here, guys, and then I will see you in the next video. So if you haven't subscribed, just make sure that you subscribe, and then just like the video so that it can reach more people. All right, thank you, guys.